Could a trade war with the United States crash Canadian real estate market? If you open the newspaper in the last 2 weeks or so, you have probably seen a newly elected US President Donald Trump proposing a 25% tariff on Canadian goods as soon as he takes office in January. A tariff is essentially a tax that Canadian companies would have to pay in order to sell their goods in the United States. This type of tariff would of course have a pretty negative effect on Canadian economy, since the United States is Canada's largest trading partner, and a substantial tariff would drastically reduce the demand for Canadian goods in the United States, because essentially Canadian goods would go up by about 25%, which would make them less attractive. Several Canadian economists already tried to predict the effect that this type of tariff would have on the Canadian economy, and a study done by University of Calgary found that this type of tariff would shrink Canadian economy by about 2.6%, and that's just the direct effect of the tariff. We're not even talking about the secondary or the third waves of effects that would take place once Canadian economy would shrink. This type of effect would basically put Canadian economy into a recession, and now we can sort of try to work out what type of effect this would have on the Canadian real estate market, because we have been through recessions, so there is some historical data to sort of examine and try to figure out what are the likely things that could happen if this tariff is in fact imposed and if Canadian economy does in fact go into recession. So first of all, the effects would be regional, because some provinces are more dependent on the trade with the United States than others. I am Vancouver real estate agent in British Columbia, and British Columbia has a pretty strong trade with the United States. In fact, 57% of BC commodity exports are directed to United States. That amounts to about $28.3 billion in 2022. Other provinces that perhaps are not as reliant on the trade with the United States would be affected less. Now, you might be thinking, what sort of effect would this trade war have on these specific provinces? Essentially, a lot of companies would be shutting down or reducing their staff, reducing their overhead, because there's just less demand for their goods. And that follows with a lot of job uncertainty. People are less likely to spend more money. That is the recession. And what follows something like that is also currency depreciation, because our currency is strongly tied with the United States dollar. So what happens when Canadian economy is not doing very well? Well, that is likely to weaken Canadian dollar. Tariffs are very likely to weaken Canadian dollar. Even if we retaliate against the United States, we are still a much smaller economy. It will be a hard hit for US economy as well, but we are going to feel the effects harder, which means that Canadian currency is likely to depreciate. All of these are just kind of likely scenarios. Of course, nobody can predict the future. In the effect of recession and weaker currency, our government would have some policy changes, some things they would try to do to sort of stabilize the economy. They would try to give some sort of subsidy to businesses that are greatly affected, maybe some sort of tax credit, maybe some loans, some grants, things like that, to sort of stimulate the economy and not have a lot of businesses all shut down at once. And we actually have seen something like this happen in a pretty recent history during COVID. If you remember, a lot of businesses were struggling. There was a lot of economic uncertainty, and the Canadian government responded with giving subsidies, giving sort of loans to businesses, trying to stimulate the economy. Another way that Canadian government could respond in is lowering the interest rates. And that's another very likely scenario, because interest rates is one of the best ways to sort of control the demand for goods and sort of control the inflation almost. So when you have a lot less demand for goods, you have recession. Canadian government, the federal bank, is likely to sort of reduce the interest rates to stimulate the money borrowing, make it easier for businesses to borrow more money so they can keep workers on payroll, so they can keep on investing in production, that they can keep on sort of expanding their business. When the money is cheaper, it's easier to do. And once again, during COVID, we have seen a very similar situation where the interest rates went almost negative because the Canadian government was really trying to stimulate the economy and create a lot of cheap money. So that could be some good news for some people, because of course, if you already own real estate and if you are on a variable mortgage over the last few years, I'm sure you felt the pain of having higher mortgage payments. Well, with cheaper interest rates, the mortgage payments would go down. Also, the type of properties people could afford would go up as well, because the lower interest rates are, the more money you can borrow. Just simple math. And again, we've seen the stimulus of lower interest rates have a great effect on the real estate market during and post-COVID times. There was a lot of demand for real estate. We had a bit of a boom. The prices started to skyrocket. This was once in a lifetime type event. A lot of people didn't know how to react to it. It was impossible to predict. And unfortunately, or fortunately for some people, depending on where you landed in that situation, the prices have really gone up by quite a bit. Could that happen in this situation as well? Maybe. I mean, nobody really knows the future, but this would be quite different, because this would be a recession forced by a tariff war. So that is slightly different. And also it depends on what type of stimulus government would offer. During COVID, almost every business was affected. This will be sort of more directed to businesses that do business with United States, that export their goods to United States. So this would be more limited response in terms of the government stimulus to businesses directly, but it could have a wider effect in terms of the interest rates becoming lower. Another thing that happens, unfortunately, with lower interest rates, you get higher inflation. And with Canadian dollar likely being weaker because of these tariffs, and interest rates coming down because of these tariffs and the government's way to stimulate the market, well, the prices are likely to go up. And again, we don't have to look too far back in history to recognize what effect that has on the market and on the economy. Right now, over the last couple of years, we've been really battling with some high inflation. That's why the interest rates have been so high, to sort of try to stabilize the inflation. Well, in a case of this, the inflation could also really go up, because a lot of goods would become more expensive for Canadians as well. If US is likely to do a tariff on Canadian goods, well, we would likely be in a position to introduce a tariff on some of the US goods, which in turn would make these goods more expensive for us, and with weaker dollar, etc., more money in economy with the stimulus, it is very likely that the inflation would be higher. When the inflation is likely to go up, I find that a lot of people are more likely to invest in real estate. It is a little bit counterintuitive, but that's at least from what I've seen, and that was one of the primary reasons why the real estate market has gone up so much during COVID times. A lot of people foresaw inflation getting out of hand with how much stimulus the economy got, how much money was printed. And a lot of people decided to park their money in real estate. It is looked at as one of the safer ways to protect your money. Now, that of course will depend on which market you're in. Here in Vancouver, the market has proven to be pretty resilient. The prices in general do fluctuate, of course, just like any other market, but over long term, they do tend to go up, and that's because of the geography, that's because of how desirable the city is. That's a subject for a whole nother video. But this could mean that more people would choose to go into the real estate market. And that actually brings us to another point, is international investments. Usually when the money is becoming very cheap, and usually when the currency kind of becomes lower in value, Canadian dollar losing its value, a lot of international investments would enter the Canadian market. Well, now, until 2027, Canadian government has actually banned foreign ownership of real estate. And that's actually a very interesting point, and very interesting how the situation will resolve itself, so to speak, because again, usually when the Canadian dollar becomes weaker, we do get a lot of international investments in the real estate. Now with this foreign ban, I wonder how big of an effect that will have. I am myself not an economist, so I think it will be an interesting case study if this whole situation unfolds, and how the foreign ownership ban will affect the sort of inflow of foreign money into Canada. The foreign buyers can still buy commercial properties, so that's another avenue that is still open for them, and chances are commercial real estate will drop greatly. Again, some regions will be affected more than others. When businesses are going out of business, when businesses are reducing their operations, the commercial real estate becomes more available, and it still hasn't really recovered from COVID. So it will be interesting if we're going to see more foreign ownership and foreign investments into the commercial space. As you can see, it's pretty difficult, almost impossible to predict how the situation will unfold and how exactly this will affect the real estate market. But at least I hope I gave you some sort of thinking points about likely situations. All of this, of course, depends on the Canadian government's reaction to these tariffs, if the tariffs do in fact happen. It also depends on how resilient companies are in Canada and how quickly they can find other trading partners. It's not an easy task, and there's multiple articles talking about how Canadian economy is sort of very dependent on US because we are underpopulated. We don't have a strong enough domestic demand, and that's why we are reliant on other economies, other bigger countries to trade with. In the long term, I think Canada will be fine. Of course, we'll find other solutions, and governments do change, policies do change. So even if this policy comes into play, I am pretty optimistic on Canadian economy in the long term. In the short term, yes, it could be very turbulent. And I hope I got the point across to you that it's not all simple. It doesn't mean that since the economy is going to be struggling, the prices are going to crash, that the real estate market is going to crash. It could, yes, but also it could go up like it happened during COVID. It could just stay stagnated. That's what I think will happen. Likely case scenario, the real estate market is just going to sort of stay flat for a while until economy improves and starts getting better, because I think a lot of factors are likely to cancel each other out. But what do you think? Leave your comments in the comment section below. Please be nice to each other. Again, I'm not an economist. I'm just basing a lot of this information on the articles and the different studies that I have tried to compile to make this video. I really hope that this tariff doesn't happen. I really hope this is just a negotiating tactic, and this video will be redundant in a few months' time. But time will tell, and of course I'll try to keep you updated on this YouTube channel. Subscribe so you don't miss those videos when they do come out. If you enjoyed this video, give it a thumbs up. And if you are looking to buy or sell real estate in Greater Vancouver, or if you just need some advice, feel free to give me a call, shoot me an email, shoot me a text message. I'm a working realtor here, and I'd be happy to help you. Also, if you don't want to talk to me yet, you just want to know how the process works, you don't know where to start, I have an absolutely free guide linked in the description below. You don't need to sign up for anything, it's just a tool to help you get started. Thanks for watching, and we'll see you next time. Bye.